Why geopolitics matter more than ever. In an interconnected world, a conflict thousands of miles away can wipe out billions in market value overnight. Sanctions, war, political instability, these aren't just headlines, they are signals. They shape inflation, oil prices, supply chains, interest rates, and your portfolio. This is not fear-mongering, this is strategic awareness. Welcome to our full masterclass on geopolitical risk. How to understand it, prepare for it, and invest through it. Before we start, don't forget to subscribe for deep dive investing content that helps you navigate a complex global economy with confidence. What is geopolitical risk? Geopolitical risk refers to the impact of political decisions, unrest, and conflicts on economic and financial systems. Topics: definition and historical perspective. Types: military conflict, sanctions, coups, diplomacy, breakdowns, terrorism. How risk levels are measured. GPR Index, World Uncertainty Index. Difference between perceived and real geopolitical risk. Market reactions to geopolitical events. Markets hate uncertainty, and nothing delivers uncertainty like geopolitics. Exploration. Market behavior during conflicts, e.g., Ukraine invasion, Gulf War, 9/11. Impact on equities, bonds, oil, gold, and currencies. Safe haven flows, USD, JPY, CHF, gold. VIX spikes and risk-off behavior. Want breakdowns like this on current global events? Hit subscribe and never miss a timely market deep dive. Energy, commodities, and supply chains. Every conflict leaves a ripple in global supply chains. But when oil or rare earths are affected, the ripple becomes a shockwave. Details: how war and sanctions affect oil, gas, and commodity prices. Case study: 1973. Oil crisis, Russia-Ukraine. War supply chain choke points, e.g., Taiwan semiconductors, Suez Canal. ESG concerns during crises. Currency and interest rate impacts. Central banks react not only to inflation and growth, but also to conflict. Discussion: flight to safety in global currencies. Emerging market currency crashes, central bank response to geopolitical shockwaves, IMF, World Bank involvement, defense stocks, and geopolitical winners. Some industries thrive in crisis. Defense, cybersecurity, and energy often see huge inflows. Sectors that gain: defense contractors, Lockheed Martin, Raytheon, Northrop Grumman. Cybersecurity, CrowdStrike, Palantir, Fortinet Energy, ExxonMobil, Chevron, LNG players, agriculture and food security investments. Case studies, past crises and market response. History doesn't repeat, but it does echo. Featured events: Cold War nuclear fears and U.S. spending 9/11, and the global security overhaul Arab Spring and emerging market disruption Brexit. Sanctions on Iran, Russia-Ukraine, invasion. Lessons: asset class behavior, regional impact analysis, time to recovery for major indices. Interested in real-world investing lessons from these events? Hit that subscribe button now. Geopolitics and emerging markets. Emerging markets offer growth, but come with geopolitical strings attached. Insights: political instability and capital flight. Currency, volatility, and inflation spikes, sovereign debt risks. Case: Venezuela, Turkey, Argentina, South Africa. Geopolitical risk in corporate strategy. From Starbucks to Shell, companies face risks based on where and how they operate. Details: how multinational firms hedge geopolitical exposure. Corporate scenario planning insurance and sovereign risk protection. BlackRock, McKinsey, and geopolitical modeling investment strategies to mitigate risk. You can't predict every conflict, but you can position your portfolio to survive, or even benefit from, unexpected shocks. Strategic tools: diversification across geographies and asset classes, allocating to real assets, gold, commodities, real estate. hedging with options and volatility tools, satellite strategies, defense ETFs, inflation bonds. Be sure to subscribe and share this with other smart investors. Media, noise, and misinformation. Every tweet isn't a trend. Every headline isn't a market move. Learn how to filter noise from signal. Tips: how to interpret news without overreacting. Biases in financial media coverage. Trusted sources for geopolitical insight. Role of misinformation in risk pricing. The role of technology in geopolitics. From cyberwarfare to TikTok bans, tech has become the new battleground. Exploration, cybersecurity threats, and national defense, tech nationalism, Huawei, 5G, semiconductor bans. Social media's role in destabilization, emerging frontiers, AI, surveillance, and data wars. ESG, ethics, and investor conscience. In times of conflict, values meet value. Should you profit from war or prioritize ethics in crisis? Key points: ESG, investing in volatile regions, divesting from authoritarian regimes, ethics versus alpha, moral dilemma or false choice. Shareholder activism during war, the future of global risk, preparing for what's next. The world is not getting simpler, but your strategy can get stronger. Forward outlook. Key geopolitical hotspots to watch: Taiwan, Iran, Sahel region, climate conflict nexus and water wars, superpower competition, US-China, strategic tension, the rise of multipolar instability. Risk isn't going away, but neither is opportunity. Every crisis brings change. For investors, that means risk, but also reward. Key takeaways. Understand geopolitical risk as part of macro strategy. Balance protection with exposure to opportunity. Build portfolios that respond, not react, to the world around us. For more insights on global investing, macro strategy, and future-proof portfolios, be sure to like, subscribe, and turn on notifications. Geopolitical risk. Invest with eyes wide open.